welcome to the Mobility Innovators Podcast.
Hello, everyone. I'm so happy to welcome all listeners from around the world to the Mobility Innovators Podcast. I'm your host, Jaspal Singh. Mobility Innovators Podcast invite key innovators in the transportation and logistics sector to share their thought about the key changes in the sector, about their work, and what is their forecast for the future. Today, I'll be speaking with an amazing venture capitalist who started a mobility-focused fund long back. He's the founder and general partner of ManivMobility, based out of Tel Aviv, Israel. Tel Aviv is emerging as the capital of mobility startup in the world. ManivMobility has raised around 160 million so far and has invested in more than 37 startups. Some of the notable investments include Autonomo, bipi, Aurora, Revel, Turo, Upstream Security, Ridecell, etc. He has already exited 4 of them and more to follow. His involvement at the intersection of transportation, technology, and policy dates back to early 2000, when he helped establish Washington, D.C.-based energy security policy and advocacy group, Securing America's Future Energy Safe, on whose board he continued to serve. He's the director and advisor at many other mobility startups within the ManivMobility and his broader network. I'm so happy to welcome Michael Granoff, general partner and founder of ManivMobility. It's now time to listen and learn. Hello, Michael. Thank you so much for joining us on the show. I'm really looking forward to our conversation today.
It's a pleasure to be here. Thank you for having me.
Great. So today I'll be spending time getting to know more about you, your professional journey, and your thought on innovation and technology trend in the mobility sector. To begin with, I would like you to share some fun fact about yourself with our listener. And also, are there any interesting facts about your career that are not on LinkedIn?
Okay, so there's a lot. There's a lot that's not on LinkedIn, I guess. I have a broad range of interests. I've been lucky to be exposed to a lot of amazing things in my life, including having been a friend and a fan of the late composer Stephen Sondheim, and raced harness horses and ran a lot of marathons. So there's a lot that I've done these days. I feel a little bit unusually singularly focused on the task at hand, which is finding the most impactful companies around new mobility for the benefit of the planet and the people on it.
Oh, great. Good to know that you're a marathon runner and all. So great to learn. That's why you maintain your physique so well. Now, coming to my second question, you completed your bachelor from Tufts University and later did your MBA and JD from Kellogg's Northwestern University. And you're also credited with the creation of Washington-based policy and advocacy organization, Securing America's Future Energy, which is quite interesting. What is the story behind that move? And I read some article which mentioned that 9/11 had a big influence on your career move. And if I add later, you moved to Tel Aviv and launched this ManivMobility fund in 2015. So I'm curious to learn why you decided to become a venture capitalist and focus on area of mobility and transportation. How did your interest shift from policy advocate to innovation? It's quite a big move.
It's quite a big question. But I should begin by clarifying that the person who is singularly responsible for the impact and success of that organization in Washington that you mentioned, SAFE, which used to be Securing America's Future Energy. That person is its founder and still CEO, my friend Robbie Diamond. I'm honored to still serve on the board. He and I began having conversations, as you say, in the wake of 9/11, around the fact that there was a real distortion in that oil has a monopoly on global transportation. The entire lifeblood of the global economy is transportation, and it is almost exclusively powered by oil. And in addition to that, oil, it does not exist in a free market. Like, for example, electricity, of which there are a variety of ways to generate electricity that compete against each other. Oil is the price is based on obviously supply and demand, and that supply is manipulated by the OPEC cartel. And so it's effectively a tax on every person on the planet. And that's a huge distortion on the global economy and on global security. And I think we've seen in the last several months with the situation with Russia and Ukraine that every geopolitical issue has an Achilles heel, which is energy. And so that was the impetus of us starting that organization. And through that organization, I got educated as to the fact that if you really wanted to break the monopoly of oil and transportation, there's only one way to do it, and that's electricity. And then furthermore, I came to the conclusion with the help of some folks that I spoke to at MIT in the mid-2000s that because of the trajectory of the price of energy storage, that actually electric transportation, at least in light duty ground transportation, was actually inevitable, because at a certain point the price of energy storage would drop below that of oil. Frankly, I thought that would happen much sooner than it has, and the reason for that is I didn't expect the U.S. to reverse a 40-year decline in oil production as rapidly as it did with the advent of extraction technologies in the early 2010s. I don't begrudge that fact. It was good for America, for economy and jobs and trade balance, but it did take away a lot of the urgency around diversifying our transportation fuel, and actually gave a big leg up, I think, to China, which at that time was adding vehicles at a furious rate, didn't want to become dependent on imported oil as the US had, and also saw an opportunity, frankly, to leapfrog and become a leader in electric vehicle technology and the supply chain for batteries. And they have done a very, very good job at that. And I think the US and the West has a lot of catching up to do as a result of that. So there was a lot more to your question, but maybe we'll get into the rest of it as we continue the conversation.
Great. No, thank you so much for sharing these facts. And in fact, I traveled to China in 2008 and 2010, and I saw at that time they have a big fleet of electric vehicle and all. So they really has done a good job. I fully agree with you. Now, a little bit about your portfolio. So you have invested in more than 64 companies so far, as per our last count. I don't know, probably it's more because you did a lot of angel investment too, and you already exit 4 of them. And you invested in quite a wide range of company, including sensor, software simulation, autonomous vehicles, cybersecurity, micromobility, and also some new mobility business models. So it will be great if you can share more about your investment thesis and geography focus, and what are your investment strategies?
I should probably fill in the most important chapter between the success that we had with SAFE in passing an energy bill in Washington in 2006 that had, among other things, first in the world electric vehicle incentives, and the venture capital fund that you allude to. So after I became convinced that electrification was inevitable, I went out, tried to figure out how to make a business of that, or how to invest in that thesis, and happened upon 2 gentlemen in early 2007. And quite honestly, I probably made the wrong choice. Maybe the single biggest binary mistake in business investing history, as I picked a company that ended up going to zero, and passed up a company that ended up going to $1 trillion, although I guess it's a little down from that. And that was when I chose a Better Place over Tesla. But I'll say that I did that, I think, for it was an honest mistake, which is to say that I think the model of Better Place, which was a company that was founded in early 2008, the model was, I think, potentially one of the most powerful business models ever conceived, as it was conceived by its founder, Shai Agassi. And I think had the execution been up to the imagination of the model, that actually Better Place would have had a bigger impact than Tesla, because the idea really was to make EVs affordable to the masses much earlier than it turns out that they have become, through a model that I won't go into depth in, except to say that it really separated the car from the battery, made the battery kind of part of the energy infrastructure owned by the operator, in this case, Better Place. And then you buy the car without the premium of the battery, and you pay for the miles that you use, similar to the way you pay for data on your cell phone. Any event, when that did come to an end in 2013, we ended up moving to Israel. It was supposed to have been a temporary move, became permanent, but it was right at a moment really where Israel was experiencing a real renaissance and innovation around automotive and mobility. And I started, based on the experience I've had during Better Place, I started helping out a bunch of these companies, and I started doing some angel investing myself, and that's what led to the fund that you alluded to. I'm not sure where you got the number of portfolio companies. We have, I think, right now 37 portfolio companies in 8 countries. We've raised 2 funds totaling about $160 million, and almost fully invested, both of them at this point, into those 37 companies that are across 8 countries. But most of the early investments were in deep tech around automotive that came out of Israel.
Okay. And you have any specific thesis, like investing only in mobility, or you're now expanding outside also mobility?
No, we're one of the few venture capital funds you'll meet that does not have the word venture or capital in our name, because our name is ManivMobility, because mobility is what we do. It's all we know. We don't really know how to do anything else. And but it's a pretty broad sector. It is about the movement of people and goods, and it's about making that movement cleaner and safer and less expensive, more accessible, more convenient for people, because mobility is really fundamental. And in fact, upward economic mobility is tied very closely to physical mobility. And it's undergoing enormous change. It's undergoing a digital revolution, very, very similar to that of which we have seen in the last decades around information and communication. And it's very exciting, because even as we're living more densely in cities where it is unrealistic and impossible for everyone to have their own individual 5-passenger internal combustion engine car, the opportunities that electrification and digitization, and really the diversification of form factors and business models really, I think, are in this decade going to open opportunities to billions of people to be able to get around in less expensive, safer, cleaner, and more efficient ways. And I think the impact that will have on the global economy will be phenomenal.
Thanks for sharing. I fully align with your vision. It's like how to make mobility more affordable and safe, because for any economic activity, you need to move people, and people who are at the bottom of pyramid are always suffer because they don't have the safe and affordable choice to move and all. So now you mentioned that you moved to Tel Aviv for a temporary reason, and then it became permanent. And I must say that it's one of my favorite city too, even though I haven't get a chance to visit it yet. Probably later this year, I'll be visiting Tel Aviv. One thing I love about the city is it's emerging as a capital of mobility startup in the world. There are so many mobility startups which are emerging from Tel Aviv. There was EcoMotion happen last month, and it was great to see so many companies. Do you want to share what is the secret sauce? Why the Tel Aviv is emerging as a mobility startup hub in the world? And also, I think you mentioned somewhere in the past about the Mobileye, like how that company has emerged and was the first one to go out of Israel. So is it because of Mobileye mafia, or is it because of the policy structure or government support or education system? What is the secret of the city?
Well, I honestly, I don't think that in this case that you can separate mobility from Israel's startup innovation sector. You know, the book Startup Nation, written by my good friends Nancy and Ridecell Singer, is now, I think, about 12 years old. And they wrote that book because everyone wanted to understand exactly what you're asking, what makes Israel so inherently innovative. Yeah. Try to answer it. And what's amazing is that in the years that have passed since, I think that innovation has only accelerated in the volume and in the quality, and that goes across the sectors, and everything from cybersecurity to fintech to SaaS to everything under the sun. and mobility has certainly been a part of that. Mobileye definitely deserves a tremendous amount of credit for inspiring, I think, an enormous wave of mobility startups in Israel. But I wouldn't describe it really as the Mobileye mafia, because another thing, the Mobileye and their CEO, Amnon Shua, I think one of the most talented men in Israel, one of the things they really have done is retained their talent quite well. I had thought, especially after the acquisition from Intel, we would see exactly what we described. There's a lot of refugees from Mobileye going out, starting their own companies. And, that's normal in the tech world. It's normal in Israel. But in the case of Mobileye, they really, I think, have retained their talent to a tremendous degree. That's very, very admirable. But they have been a source of inspiration. And that's why we see something like 600 mobility startups over the last decade here in Israel. And many of them in our portfolio, as you say, everything from sensors like the public company Arbe Robotics in our portfolio that does high definition radar, to automotive cybersecurity. We have in our portfolio 2 such companies, C2A and Upstream Security, to monetization of vehicle data like Autonomo, to simulation like Cognata. And then there's even Teleoperation. Phantom Auto is a company based in California, but having their R&D here in Israel. And those are just a few from our portfolio. There's like I said, hundreds more. And it's been a very exciting thing to watch all these emerge and to get to see these incredible talented founders.
Great. No, thanks for sharing. 600 mobility startup in 1 decade. That's amazing, and especially only in mobility, it's quite impressive. And I know many of these founders, especially Optibus and Move.it and all, and I know what the work they are doing. It's quite global. Now, shifting gear a bit, you must be meeting with hundreds of industry experts, founders, and ecosystem partners who must be sharing a lot of idea about future of mobility. They must be coming with you, talking about how the future of mobility will change. So I would like to ask you which technological innovation you are more bullish about as a VC, as a person, as an expert in mobility, and what's your views on other? Because there is a lot of talk about autonomous mobility, mobility as a service, urban air mobility attracting a lot of money, electric vehicle, which you mentioned, you were very bullish earlier to, micro mobility, you invested in that space, and any other area where you feel that's the future we should look for.
Sure. It's again a broad question. I'll say that look, as we've said, I think on electrification, we now have consensus. Everybody agrees. Every car company's got a target date. Every country, cities, everybody's got a target at 2030, 2035. All electric vehicles. It's a fantastic thing. But one of the things I think people tend to lose sight of is electric vehicles don't necessarily have to come in conventional vehicle format. Yeah. And one of the implications of digitizing mobility is having a diversity of form factors. And in fact, if you look outside my office window here, you'll see hundreds of kick scooters on the streets. There are now 4 operators of kick scooters in Tel Aviv. I think they're all profitable in the city. And why is that? It's because, well, Tel Aviv is a very crowded, congested city. Nobody wants to drive through Tel Aviv. I don't even want to get in a cab to go across Tel Aviv because, it's aggravating to sit in traffic. But the city also is flat. The weather is good 350 days a year. And it's obviously a very, as we've said, a very tech savvy city. So the best way to get around is scooters. A lot of people figure that out. Even in my own demographic, I think, which is not quite the same demographic as most of the cities, it's considerably younger. I think we see that in some other major cities around the world as well. So, as far as autonomy, as you mentioned, is concerned, I think most people, I get asked a lot, as I think everyone around the business does, when are we going to see the driverless cars? Well, yeah. Depending on what you actually mean by the question, the answer could be they've been here for several years already, or it could be will never be here. So you have to really get specific. And I think that as far as robo taxis are concerned, as far as like the ubiquity of being able to summon vehicles without drivers, take you around major metropolitan areas, it's still going to be some time, because one of the things you need three things to actually enable that kind of a service. You need the technology to be 100% ironclad. Being better than the average human driver is not nearly good enough. Really has to be near perfect. And there's so many edge cases, and it's taken a lot longer than a lot of people thought to be able to work that out. So you need that technology. You need a regulatory regime. You need policymakers to enable that to be a legal service. And the thing about that is that policymakers tend towards inertia unless you have the third ingredient, which is market pull, which means consumers screaming from the rooftops, "We want this," as Uber kind of successfully was able to generate. But Uber without the driver, which is what we're describing, is not something that I think the average consumer feels very passionately about these days. And I think it takes quite a while for the economic argument to become plain to people, to the point where the demand is palpable enough that the policymakers then kick into gear. Plus the fact on that first point that as the technology and all the edge case not clearly worked out. So all those three things have to come together. I think it's still several more years before that becomes something ubiquitous in any sense, although Cruise did just get its license to offer paid commercial drives in driverless cars in San Francisco. Waymo obviously operating in Chandler, Arizona now for quite a while. So it's on its way. It's going to take a long time. On the other hand, when we talk about automating vehicles like trucks, which operate mostly on highways, and where there are a lot fewer edge cases, and where the technology really is, I think, much closer to being as ironclad as it needs to be. Plus the fact that we all are aware of the supply chain crisis that we've undergone globally over the last couple of years. Even my mom asks me about the truck driver shortage. That's the stuff from front page news. So what are we getting there? We're getting that market pull. And I think that market pull is starting to, first of all, weaken a little bit the opposition to this idea that comes mainly from the unions, which I think are misguided in their fears. And all of a sudden the policymakers now say, hey, this is something we got to pay attention to. We have to look into enabling. Good friend of Maniv's is a state senator in Florida named Jeff Brandis, who's been a leader in this. I think we're going to see in the U.S. and in enough states the policy move to the point where autonomous trucks become a reality really in the next few years. So I think it's a premise on which we're basing a lot of investment, and that I think will be tremendously impactful economically.
No, thanks for sharing, Michael. I fully agree with you. In fact, I know that you also cycle to work, so you don't drive in Tel Aviv. So what you mentioned about it's too congested and everybody loves to cycle and all. And I agree with your point about autonomous mobility. It's not just the technology, the regulatory regime as well as the market pull is very important. I work with Uber, so I know it was a different story altogether when Uber launched, and autonomous mobility, not everybody is really fond of. Now, following up to this question, in autonomous mobility, there are two different kinds of technology which are going on. And there is a lot of discussion about LiDAR versus camera-based sensing approach or decision-making approach. You invested in a couple of companies in LiDAR space and all. As a VC, which one you are more bullish about and why?
This is a very technical argument. There are a lot of interests on all sides. We've invested in a LiDAR company that made a run of it, but decided after a couple of years that actually when we invested in a company called Oryx, which had a tremendously talented team, but also a very down-to-earth and rational team. And at the time that they got started, there were really, I'd say, less than 5 well-funded LiDAR startups in the world, and they had a very unique proposition. But then two things happened. It turned out that, as we've said, the market for autonomous cars, or at least for robo-taxis in volume, turned out to be a lot further away than we expected it to be. And a lot of competitors showed up within a year or two of their founding. There was 40 or 50 companies that had received significant funding to LiDAR. So we all kind of looked at each other and said, is it worth pursuing this? And concluded that we still have a lot of money left there, and probably there were better things that we could do with it. And that was, I think, a very adult decision by the management board of Oryx. But meanwhile, across town, our friends at Innovis have made a tremendous amount of progress. Now, a public company, and have contracts with real OEMs to have their LiDAR on actual commercial vehicles, which is very exciting. I think we'll see more of that. Look, obviously the biggest proponent of camera only has been Tesla. They also happen to have several million cars without LiDAR already on the roads, which they promise will be full autonomous. So whether that is a position taken from engineering prowess or from being realistic about business is unknowable, and they certainly could be correct. It's not a frivolous argument, but my own instinct is that cost of LiDAR is declining, and redundancy is important. As I said, it's not enough for autonomous vehicles to be just better than the average human driver. They have to be near perfect. So I think we'll see all flavors, but I think ultimately people will take the position of the more sensors and the more redundancy, the better.
So you're bullish on LiDAR, I would say.
I think LiDAR has a future. Like I said, it's a complicated future. Because when will we have vehicles produced in volume, at least for level 4? Although now, like within this, they're selling to level 3 systems, and LiDAR has other applications. Well, LiDAR is here to stay. To the degree to which it's going to be ubiquitous is what's in question. I'm not really the most qualified person to answer what that will be. I don't think anybody knows for sure, but it's obviously not, as they say, a blue ocean anymore.
Yeah, no, thanks for sharing that. And I agree. What you mentioned is that different technology will survive. So it's not only the one technology which will be there. So we will see different technology, and one of them will be stronger, and one of them will be also running in different part of the world. So not one technology will work everywhere. Now, you were very bullish about electric vehicle. In fact, like you mentioned, you invested in Better Place, and you were thinking it will change the business model, not only the buying cars and all. How bullish you are on hydrogen and fuel cell vehicle? Because China has already started investing in that technology. So you think we will see kind of a leapfrog, like some country will not have electric and go ahead with hydrogen, or you think that it's still far away?
So I've heard about hydrogen as long as I've been around in this business, and even before. In fact, I remember the speech, which I went back and looked up, given by President George W. Bush. Turned out it was in early 2003, in which he said that a child born at that time, their first car might be a hydrogen car. In fact, my daughter was born shortly thereafter, and she drives an electric car. So I have to say a little jaded on hydrogen as a mass adopted application for transportation, but always open-minded, as it's important to be in our business. And there's a startup here in Israel, H2 Pro, that's attracted a lot of funding, a lot of attention, and that we're gonna continue to learn from. I think people have, to some extent, underestimated the capacity of EVs to evolve, or batteries to become more energy dense and less expensive. So whether there's a role for hydrogen and heavy duty or more is an open question. but I'm still in the skeptic camp on that.
Yeah, I mean, I would say it's a very early day because China recently started investing big way in hydrogen, but still it's not fully commercial like electric vehicle, and I think it will take more time, especially for the smaller vehicles. So probably the heavy duty vehicle will come first, but the smaller vehicle, the cars and all, will take its own time. Now, I want to discuss about this battery and rare earth material. So you mentioned that oil was not good because of this OPEC cartel and there was a control. But I think the battery is also going through now the same phase with the rare earth mineral becoming like a new oil, and some companies are controlling it. Venture capitalist firm invested more than $30 billion in last 2 years alone in the battery technology. There are a lot of discussion about different chemistries and solid state batteries and others. How do you think this space will evolve, the battery technology and all? And I think you have invested in a couple of startups in this space. And how are you betting on different battery technologies? Are you bullish about one particular kind of chemistry, or you are putting money in all kind of different startups?
We're actually, when it comes to the actual design manufacture of batteries themselves, we're pretty agnostic, and we're pretty much staying away. I've seen, since I started paying attention, the price of energy storage go from over $1,000 a kilowatt hour to very close, depending on who you listen to, very close to $100 a kilowatt hour.
Yeah.
Most of that has come through incremental improvements year after year, not through huge breakthroughs in chemistry. Solid state is obviously very interesting, a lot of attention, a lot of money, and I hope that it becomes a major player in the industry. There are other approaches, and to the degree to which we can minimize the need for rare earth minerals, the need for extraction and mining of some of these things that are have adverse impact in their development, the better. But at the same time, the battery research is similar in my mind to, I often analogize it to drug discovery. Costs a whole lot of money, and your odds are not that strong as you invest that money. Obviously, if you're successful, it's an enormous return, but that's one area in which we have played it a little bit safe and looked more towards the applications of electric rather than the development of the underlying battery technologies.
I love your analogy about the battery technology like a drug discovery. So there are more misses than hits. So and it's more about incremental growth rather than radical innovation and all. I fully agree with you. It's still a kind of a space where nobody can predict. I remember in some time back you mentioned about that. If you know which technology will work, probably you'll put more money in that area and make billions. But it's hard to predict how that space will evolve. Now, one topic you mentioned earlier is the cybersecurity, and I think it's emerging as a very big challenge for every industry, also for mobility industry. In fact, there was a survey done by Statista, and they found that 45.5% of survey respondents claim that their organization faced 1 or 5 successful attacks during past year, and I think it will increase. TelAviv is emerging as a hub for best cybersecurity companies in the world. So what do you think about future cyber attacks look like, and what is your assessment how strong or weak mobility players are in this area? Because sometimes they feel it's not, it's more the technology company which can be affected, but how you think it can impact, in fact, the mobility company as well?
Cyber security is a permanent feature of the landscape within mobility and within every other sector. And that is just going to be the case going forward. Israel is enormous, even more than mobility, an enormous hub for cybersecurity, and it's going to be essential to every industry and ultimately to every individual. As we see it. There's a dilemma, which is that until there is some event which really galvanizes public sentiment, it's hard for car makers, for example, to invest a lot of money. They're looking to really reduce costs in every area, and here you're never able to prove that this investment had a high IRR. But I think the regulations are moving in the direction of requiring more and more security around vehicles, particularly as we get to greater autonomy, greater automation. And as I said, I think we've looked at close to 20 automotive cybersecurity companies over the years. Some of them you may have heard of. Some of them have been acquired. Many of them are still operating. Two of them are in a portfolio I mentioned earlier: Upstream Security, that's cloud-based, and C2A, which is vehicle-based. But I think that this is obviously a sector not limited to mobility, but certainly mobility is going to be an area that it's just going to be baseline to have a solid protection against the potential for invasion over the internet.
Well, thanks for sharing that. I agree with you. It's hard to justify the IRR unless you are under attack. So a lot of these transit companies as well, especially in North America, they were under attack recently. And now they are thinking to hire a chief security officer or chief cybersecurity officer within the organization. Earlier, they never had those kind of a role. But now, like you rightly mentioned, now the regulation is becoming more and more stringent in that space. Now, thanks for sharing that, Michael. I mean, it's a lot of learning point from you. Now I want to discuss a little more about the investment side. And basically, my question is that you and your team must be receiving hundreds of decks every week from the founder and must be meeting thousands of founders every year. Even though last couple of years were very different, the due diligence were happening in hours, people were closing deals in days, and things were very in rush. But now things are getting back to normal. So I'm curious to learn, how do you evaluate pitch decks, and what are the top 5 traits which are must in a good founder? So when you meet a founder, what are the things you look that if he qualify or don't qualify for investment?
Another big question you ask. So we are lucky enough to see many hundreds of deals every year, and we can only do a handful. And so we are forced to be very picky. And in fact, we have the constraints of the peculiar world of venture economics, which is to say that when you're in the business we're in, of picking companies at their earliest stage, you go into every deal knowing that the odds are against you to be able to go from an idea to a highly profitable, valuable product or service. And as a result, you need to have a starting point that if you are successful in getting to market and getting to sales, that this company can become valuable enough to pay for all the other ones that don't end up being successful. So that puts a very peculiar constraint on that I've had to get used to as I transitioned from individual investing to venture investing. But as you referenced, everything starts from the founder, and in my experience, it's heads and shoulders more important than anything else, including the idea, including the market, including the technology, because all those things are subject to change and adjust as the world changes around us. The founder is central, and we are extremely lucky to be working with an unbelievable roster of founders in all over the world. It's been a privilege to get to know these people over the last number of years, those in our portfolio, and many of those where we couldn't make it work, but we've stayed in touch and we've tried to be helpful, and we've learned a lot from those as well. If you're asking me for 5 particular attributes, integrity is obviously at the top of the list. For the most part, I don't think that's ever really been an issue in the companies that we've seen. For me, humility is central. I have seen many companies that failed really on account of hubris. And you have to understand that there's a lot more that you don't know than you know. You have to be willing to learn from everyone at every turn. And so that humility is a central characteristic without which we don't invest. And people will point to some outliers, some people that we may all know their personalities and don't necessarily check that box.
Yeah.
And the matter is that there are exceptions to every rule. I don't know which comes first, chicken or the egg in that regard, but I'm perfectly happy to miss a good deal or two, to not saying life's too short to work with folks that are not down to earth in that way. Obviously, creativity, determination, humanity. These are all things that I think we are essential to being successful in the very, very challenging world of trying to birth new ways of looking at the world, and in our case, new ways of moving people and goods around.
I loved your answer, and I fully agree with you that humility is very important, and I can see that you are also very humble. Like whenever I write you an email, I always get a response within 4 hours and 5 hours, even though wherever you are so busy, but still you manage to reply back. And also I can imagine that you expect the same treatment from others, to stay humble and learn from each other and ready to share with others. So thanks for that.
I've had a lot of opportunity to be humble, so thank you.
No, thank you for that. And now, my next question is that there is plenty of money available in the market if you have a good idea. I mean, nowadays there is no dearth of money. People are talking about raising big round, and even though there is a shortage of, like there is this winter, VC winter is going on, but still people are raising money. So nowadays founders are not purely looking for money anymore. They're looking for more strategic value. What are the other key points that the founder should look while taking investor on board? And in fact, I would say, like, how ManivMobility, beside money, what are the other things you offer to the founders so that they can be successful?
Any early stage venture fund will tell you that they are value added to their companies. I'm sure many are. For us, being as sector focused as we are, it would be the biggest waste in the world if we weren't actually adding value to our companies. And I think that if you ask them, they'll tell you that we do in very tangible ways at a very regular basis. The ways that we do that, first of all, we haven't really talked about our LP base, but we're blessed to have some sensational companies that are invested in our fund, including many companies from automotive industry, from Hyundai and Jaguar Land Rover and BMW, and many tier ones, in fact, suppliers from Asia, Europe, and the US. And we count on these supporters of ours to help us evaluate technologies, and also once we make an investment, to help us help our portfolio with their product market fit, with getting to market and fine-tuning their ideas. So having been around as long as we've been around, as long as I've been around, and one of the benefits of age, I guess, is you've met a lot of people, and you got a network that is out there to be able to be helpful to these companies. And I can't tell you how many introductions a day are made on behalf of our portfolio companies, whether it be to later round investors, whether it be to potential customers, whether it be to subject matter experts in particular areas that they need help with. And our people say, how do you manage a portfolio of that size with the team? Well, first I'll say that we are building the team. The team is growing. But second of all, one of the ways we do it is through really putting an emphasis on the informal communication. So sometimes there will be a WhatsApp group that might include some members of our team, some members of our companies, of our portfolio companies team, maybe also one or two of our strategic advisors, of which we're lucky to have a tremendous group. And some of the most value-adding and profoundly important things that have happened just inside of those WhatsApp groups on a quick response basis. So we definitely tried really hard to be as helpful as we possibly can be to our portfolio, and I think our sector focus enables us to do that more than if we were making generalist investments.
Now, I know you have, I think you are one of the few fund which has created that pool of strategic subject matter expert or advisory council. And some of those people are really great. Getting access to those people by the portfolio company is a great value addition. And I agree with you, providing your access connection and you're meeting with so many people, so you can always make connection introduction. And that's what startups need in the early stage. So this is my last question, and it's basically about what's happening in the market right now. So currently, a lot of people are talking about that funding winter is coming, and we are seeing big pressure on startup to spend wisely. We are seeing layoff, we are seeing breaks on growth, we are seeing Y Combinator issuing a letter and saying, be careful for next 2 years and all. Do you have any view on the same and any advice for the founder and how you are telling your portfolio company to be ready for next couple of years?
Well, I can't pretend to know the macroeconomic picture better than anybody else who you might hear or read. But again, been around long enough to see several of these cycles. And the one thing that I've become aware of is I think that the cycles actually do accelerate. Maybe that's with the quicker movement of information, but that gives me hope that the real rough quarter that, or really, I guess, the rough first half of 2022 that the financial markets have seen, let's hope is going to stabilize and turn in the right direction sooner than in some of the other events that I can recall, like the dot-com crash of 2000, the financial crisis 2008. But even in those cases, if you look, even just months after the worst of it, it really was a period of tremendous company creation. Some of the most important companies that we're all familiar with were born during one of those crises. So for us, the opportunity is as great now as it was 6 months ago. For our companies, it's just common sense when sentiment has turned down and when a lot of people that you might have gone to raise capital are being much more selective about their allocation of that capital, then you have to look around at what you can do to make your capital go further. And that might mean developing a little bit slower or growing a little bit slower. And I think we're seeing all the companies do that. A lot of VCs sent notices out to their companies to that effect. I've found that our CEOs don't need to hear that from me. They read the same papers I do and adjust accordingly. But it's obviously a topic of conversation. I'm hopeful that some number of years from now we'll turn back and say, hey, remember how miserable things looked in early summer 2022? That was exactly when we made this investment, and look where it is now.
Yeah, no, I wish you good luck with that, because I agree with your point. It's like more innovation happen when there are more adversaries and there are more tough, difficult times and all. So thank you, Michael, for that. I mean, we discuss about mobility, we discuss about technology, we discuss about latest trend and the investment thesis. Now it's time to learn more about yourself. And to that, we have this rapid fire question round. We generally ask these 5 questions to people, and we ask them to answer them quickly, not to think too much, but just whatever comes to your mind. So if you're ready, I'll ask you these questions.
Go right ahead.
So my first question is, if you were not in the policy or investment space, what other profession you would have selected?
Well, one of my big passions in my teen years that I continue to have passion about is harness racing, trotting and pacing horses. I did everything in my late teenage years, from training and driving, even calling races, which I really enjoyed. So that's one thing I might be doing if I wasn't doing this.
Oh man, that would have been great, but you are still doing a wonderful job. Now, you travel so much around the world. Which is your favorite city in the world?
Well, I have to say that Jerusalem is special. That will always be first on the list. My home city is New York, and I love New York. I would never choose to live very far from either of those cities, and I'm lucky to spend time in both of them. I'll tell you, Tel Aviv, which I've spent more time in than anywhere else in the last number of years, is also a sensationally exciting place. But you're right, I travel a lot, and I'm a runner, so I explore the cities running, and really love what the individual characteristics of everywhere I go.
Great. Now, you mentioned that you don't like to drive too much and all, so you must be using the transit system or transit network in the world. So I would say, which city has the best transit network in the world as per you?
I would say, and it's not such an original answer, but I think New York and London have the best transit cities in the world. And the addition of micromobility in New York, we have our company Revel that has electric mopeds, also has an electric rideshare service using Teslas. That's worth trying out if you're in New York. And in London, I've used e-bikes in the last number of years, but obviously in both cities, their underground or their subway is a tremendous way to get around. And you're right, I don't find most driving enjoyable. Occasionally, in certain situations, it is, but most of the time, I find it to be distracting and a waste of time. And I try to avoid it whenever I can.
I can vouch for that, because when you really want to see the city, you need to walk, and then only you see the city properly. Otherwise, if you're driving, you miss the real soul of the city. So walking and running is the best way to explore the city. Now, the next question may be a little bit tricky for you, because you know a lot of startup in the mobility sector and all. Which is your favorite startup in the mobility sector?
You can also ask me which is my favorite child.
Yeah.
That's look, I'm thrilled. Obviously, I have a lot of passion for the sector and for our portfolio in particular, and really find it amazing to be able to work with these companies and to see all of the creativity that comes across. It's not really possible for me to single one out.
Yeah, it's difficult to pick one. Like you can't pick your one kids. I have twins, so for me it's even more difficult choice to say which one is my favorite. Now, last question is, if you can change one thing in life, what would it be?
Well, I think the obvious answer for me would have to be go back to that early 2007 period to get on board at Tesla rather than Better Place. At least from a financial perspective, would have been the right decision. Although I have to say that so many of the blessings of my life in the last 15 years have come from the involvement with Better Place, and not a day goes by that I'm not in touch with folks from that experience, that I don't work with them in various regards. That Better Place to Ask has gone on to do unbelievable things with all sorts of companies in mobility and transportation around the world, and that's been a blessing. But from a financial perspective, certainly, if I could have participated in the Series B or C or whatever it was at the time of Tesla, that would have been a nice thing to have done. But I think I'd say that. From the perspective of founders, as we were talking about, and those two companies with very very different types of founders, but with the same creativity and ambition, and the most important point I think I'd make two founders out there is not to try to emulate those founders or anyone else, because as Stephen Sondheim put it, anything you do, let it come from you, then it will be you. Everybody has to do what comes from deep inside of them, and that's the only way to actual success.
Yeah, and you never know, everything happened for a reason. So probably in your portfolio now you have $1 trillion companies, so you have so many amazing companies, so now you will be one who will be building some of these $1 trillion companies. No, I wish you good luck with that. Sorry?
From your mouth. From your mouth.
Thank you. Thank you so much, Michael, for your great insight. I really love this conversation with you and learn a lot from your experience.
It's been a pleasure. Thank you so much for hosting.
Thank you for listening to this podcast. We will be inviting some other inspiring guests in coming week. You can subscribe to this podcast online to get the notification for the next episode. If you like this podcast, please don't forget to give us a 5-star rating, as it will help us to spread our message. If you have any feedback or suggestion for this podcast, please do write to us at info@mobility-innovators.com. I look forward to see you next time. Thank you.